Hello and welcome to InvestorToday.ca. I'm your host, Dave Glover. InvestorToday.ca is brought to you in conjunction with RBL Communications, your online IR specialists. Our guest today is Eric Owens, President, CEO, and Director of Alexandria Minerals Corporation. Alexandria Minerals Corporation, which trades on the TSX under the symbol AZX. Dr. Owens co-founded Alexandria Minerals and helped guide the company to its present status as one of the principal explorers in Val-d'Or, Quebec, with 27 years of experience in mineral exploration in North America, Mexico, and Central America. And for those of you listening, it is Tuesday, March 27th. I want to welcome Eric Owens. Eric, welcome to the show.
Thank you, Dave. Good to be here.
Well, as I introduced, it's Alexandria Minerals trading under the TSX at AZX. And you've got some great news coming out.
Yeah, today we've announced a new resource estimate on one of our projects, our Akasaba, our third 43101 compliant resource estimate on our property package in Val-d'Or. But before we get into that detail of those sorts of things, I would like to basically provide a bit of a background, a bit of context for the listeners, if that's all right.
No, that's excellent. Thank you.
Okay. Briefly, Alexandria is a junior gold exploration company with focus in Val-d'Or, Quebec. Val-d'Or being one of the top 5 or 6 gold mining districts in the world, as you probably know. They've been mining gold for 85 years. Roughly 25 million ounces of gold have been produced from the general area. More broadly, along the Cadillac Break, which is a major regional structure, which extends into Ontario, more than 100 million ounces of gold have been produced. So we're in a good area. Notably, Val-d'Or is infrastructure rich. Alexandria, by virtue of its IPO in 2006, we succeeded in a couple of milestones post-IPO during the 2007 to 2009 period. The first being the acquisition of the large property package that we have in the Val-d'Or camp. It's 38 kilometers long along the Cadillac Break, again a lucrative or prolific gold-producing fault zone. And it's opened a door for very strong potential for the discovery of large gold deposits. There are a number of large gold deposits along that fault zone. And then from the period, post-acquisition of that property package, we proceeded to increase our resources substantially through drilling. When we acquired that property package, we inherited about 150,000 ounces of gold in historical resources, and proceeded to prove up globally 900,000 ounces of gold over the next couple of years in all categories, measured, indicated, and inferred. So we've had a lot of success. It met or exceeded our expectations on those activities. And what we've announced today on March 27th here is the third resource estimate on another project in that same property package, which brings us up over the magical sort of million-ounce threshold for exploration companies. In particular, we now have 1.4 million ounces of gold in our property package in Val-d'Or, in all categories, again, in measured, indicated, and inferred. So the name of the game for Alexandria Minerals is asset growth, and we are certainly moving that in that direction. Basically, we've increased our resources roughly tenfold since we've acquired this property package in Val-d'Or.
Right, and as you said, it's great infrastructure. You've got year-round access, I understand, on those properties as well.
That's correct. We can go year-round drilling. There's probably 1 month of the year, that would be April, which is a little slower because it's muddy. But other than that, we have access. In fact, winter is probably the best time to be out there drilling away.
Well, let's talk about, if we can, the most recent 43101 that you've released.
Yeah, that's with our Akasaba project. It's smack dab in the middle of our long property package, our 38-kilometer long property package. We've been drilling on it. We've probably drilled 45,000 meters of drill core on that project over the last 18 months, slowly but steadily. And what it has shown us is it's added roughly 500,000 ounces of gold in measured, indicated, and inferred resources to our global gold budget, so to speak, with very good assay results and very good average grade. Our underground average grade is roughly 5.91 grams per ton, which is very respectable, and in fact it was pleasantly surprising. It exceeded our expectations in this one. I can't emphasize enough how important this one is, because it's an old gold mine that produced the gold back in the early 1960s and has basically laid fallow until we got a hold of the property and started looking at it and started drilling on it. So nobody has really been thinking about this project up until the time we got it. In addition, we think it has strong potential to be a multi-million ounce deposit. It has geological similarities to other very large deposits in the region, including the Agnico Eagle LaRonde deposit, which is a 10 million ounce gold mine.
Right. Well, as you mentioned Agnico Gold, and you're in a really strong neighborhood there with IM Gold around you as well, and Queenston Globex and West Dome. I mean, everyone's in that same area of play. How significant is your discovery, if you will, compared to some of the others in the region?
Well, it's a good starting point for us. We think that given the size potential of this deposit, that this is a very good discovery, and we think there's a lot of potential here. So it compares favorably with the others. The other thing I might like to add is we're pretty effective at the way we go about doing this work. Our discovery costs on this project are roughly $13 per ounce of gold discovered here. So it's not much cost when you compare it to the price of gold these days.
Mm-hmm. Now, just to get a quick question there from some of the investors, what's it cost per meter to drill in that area?
Well, it's probably cheapest in the world. Our direct drilling costs are in the neighborhood of $75 to $80 a meter.
Okay.
And then you can add other costs, geologists, assays, and stuff like that on top of it. But basically, when you compare it to other parts of the world, Nevada, they're probably $150 a meter.
Mm-hmm.
You go into the middle of Africa, you're probably looking at something much higher than that even.
Right. So you're obviously getting a pretty solid return on that investment in terms of what you're getting in terms of gold. What you said, it was $15 basically per ounce. So that's very significant. And just so that the listeners know, I mean, you were talking about a company that's well-financed in terms of management ownership, 13% management owned as well. People like to know where management is when it comes to making an investment.
Yes. Well, management owns collectively, management directors and the upper executives own collectively about 15% of the company. I keep putting in every time we do a new financing, so we're pretty on side with what we're doing here. We have a lot at stake here, personally and professionally, and we think we're on the right track here. We strongly believe that there's a lot of gold to be found where we are at, and this property package is a long property package, and we're not the only ones. We have for instance, Agnico Eagle, one of Canada's largest mining companies, owns 10% of us. They took an equity position in us couple of years ago, 2 or 3 years ago, and they've maintained that position in subsequent financing.
So that is just wonderful to hear, especially from an investment perspective. So just to wrap it up, I guess, where do we see ourselves for 2012?
So for our next steps, we have a lot on the go. On the heels of this announcement that this new resource announcement, that is, we plan on ramping up drilling. We've been moving slowly but steadily on the project. We want to see the delineation of the ore deposit and the growth of this ore deposit speed up. It's time to move much more aggressively, and we plan on ramping up drilling, increasing the number of drill rigs on the Akasaba project in particular. We have other projects that we'd like to see additional work done on this large property package as well. But in fact, our initial focus is going to be Akasaba because this thing has all the earmarks of being something sizable. In addition, as part of our routine activities, we're always thinking and seeking strategic partners and strategic opportunities, whether they're joint ventures or other aspects, business transactions. And we have a number of balls in the air, shall we speak, in that regard. And then finally, of course, we are waiting for 10 drill holes, the assays for 10 drill holes on Akasaba, which are not going to be included which haven't been included as well in this 43-101 study that we just released. So we've got a lot on the go. And it's all about asset growth. It's building these deposits bigger because we think that we have the potential not only at Akasaba to have a large gold deposit, but we have other targets as well which potentially could see the same results.
Well, that sounds amazing. So just for the listeners, it's Alexandria Minerals, which trades on the TSX under the symbol AZX. I would encourage anyone to go to Alexandria Minerals' website. They've got some great information there about their projects, about their location, and also about the areas of play that they're in. I want to thank Eric Owen, President, CEO, and Director of Alexandria Mineral, for spending some time with us today. Always a pleasure to talk to you, and we wish you well in the balance of this year.
Well, thank you, Dave. It's been good to be here, and it's been a good time.
Well, again, thank you very much, and we'll talk again soon, I hope. And I want to thank the listeners for tuning in to InvestorToday.ca. I'm your host, Dave Glover. InvestorToday.ca is brought to you in conjunction with RBL Communications, your online IR specialist. We'll see you next time.